Welcome to Raveum Insights. Today, we're diving into a really powerful current in the global economy, the flow of foreign investment into U.S. real estate. We're going to explore what the latest data is telling us and why, in a world that feels pretty uncertain, American property continues to be a beacon for investors. We'll also look at how new technology is completely changing the game for how people access this market. This quote really hits the nail on the head. It perfectly captures what we're talking about. When things get turbulent, when stocks feel shaky and currencies are all over the place, capital from around the world looks for a safe harbor. And time again, that safe harbor is American property. It's a story that just keeps repeating itself with every market cycle. So what is it about the U.S. market? Why is it considered the ultimate safe haven? Why does capital from, say, London to Singapore consistently land right here? Let's break down the foundation of that global trust. First off, it's just the sheer scale of it all. We're talking about a market valued at over $40 trillion. And look, that isn't just some big abstract number. It represents the largest, most liquid real estate market on the entire planet. That kind of depth means there are clear, established ways for investors to get in, and just as importantly, to get out. That's absolutely critical for any large-scale investment. And this isn't some niche trend, limited to a few big players. Investors from all over the globe are active here. These 5 countries you see, Canada, China, Mexico, India, and the UK, they consistently lead the charge. It's a massive, truly global vote of confidence in the stability of the US market. But the appeal goes so much deeper than just the physical buildings. It's really about the system itself. Investors put a huge value on the stable rule of law and transparent property rights. You know exactly what you own. Plus, earning income in US dollars, that's a powerful shield against currency fluctuations back home. And of course, the market is deep and liquid. At the end of the day, America isn't just selling buildings, it's exporting trust. All right, let's pivot and dig into the actual numbers. Because after a bit of a slowdown, the latest data is telling a really compelling story of a strong, decisive rebound. This chart shows that comeback crystal clear. Inbound foreign investment surged by 22% last year, blowing past $100 billion. That's a huge return of capital, and honestly, it happened way faster than a lot of analysts expected. It just signals this renewed confidence in U.S. assets, especially in things like industrial and multifamily properties. So what's fueling this comeback? Well, it really boils down to one thing: a search for predictability. As U.S. Treasury yields have started to stabilize and inflation is moderating, real estate once again looks really attractive from a risk-adjusted perspective. Global investors want stable, predictable income, and the U.S. economic environment is delivering exactly that. And it's not just commercial real estate. This confidence is spilling over to the residential side, too. International buyers invested over $53 billion in U.S. housing in the last year alone. But what's interesting is the strategy has changed. We're seeing less focus on those luxury trophy homes and a lot more on practical, income-generating properties in high-growth areas. So where is all this money going? Well, the capital is basically chasing the growth. The Sunbelt states, places like Texas and Florida, have become an absolute magnet, pulling in a massive 40% of all international investment. But that's not the whole story. Industrial areas in the Midwest are seeing a huge jump in leasing activity, and investors are also diversifying into secondary cities like Dallas and Nashville, hunting for better yields. But, the really big story here, maybe the biggest of all, isn't just where the money is going. It's how it's getting there. We are right in the middle of a structural revolution in how global investors can even access these assets. This slide just lays it out so perfectly. Think about the old model. It was dominated by massive sovereign wealth funds buying entire office towers. The barriers to entry were incredibly high. Now, contrast that with the new model. It's powered by digital platforms, and it's all about fractional ownership. This is blowing the doors open for individuals and family offices who, frankly, were locked out of these kinds of direct investments before. And the key concept that makes all of this possible is something called fractionalization. It sounds a little complex, but it's actually pretty straightforward. It's just the legal process of dividing the ownership of a property into smaller, partial shares. This lets multiple investors own a direct equity stake in a single, high-quality U.S. asset, all through regulated and transparent platforms. And make no mistake, this is not a small trend. We're talking about a massive shift. Morgan Stanley estimates the global fractional ownership market could top $25 billion by 2027. And here's the kicker. They project that the United States is going to command 60% of that total. It really cements the US as the center of this new investment universe. Okay, so you're seeing this new landscape, all this opportunity. A really important question comes up. How can you, as a global investor, navigate this world intelligently and, most importantly, safely? All right, think of this as your professional playbook. First things first, it all starts with compliance. You have to make sure any platform you use operates under US SEC regulations. Second, follow the data, not the hype. Focus on markets with real, tangible growth. Third, always favor income over speculation. Prioritize stable, pre-leased assets. Fourth, understand your tax situation from day one. And finally, diversify. Spread your investments across different asset types to manage risk. It's all about being strategic. So let's pull all this together and think about what it means for the future. We are truly stepping into a brand new era of real estate investing. Think about it. For decades, if you wanted to invest in U.S. property from abroad, you either had to be big enough to buy an entire building or you were stuck on the sidelines. But today, technology and smart regulation have made ownership of U.S. assets securely borderless. Borders have become a logistical issue, not a financial barrier. And this, right here, is the key takeaway. The same legal protections, the same opportunities that were once reserved for massive institutions are now available to individuals all over the world. This is democratization on a global scale, opening up one of the world's most stable markets to anyone with a strategic vision. The question is no longer if you can participate, but how you will choose to. So, to wrap it all up, U.S. real estate remains the world's most transparent and trusted market for global investors who are looking for stability. And new pathways, like fractional ownership, are making it more accessible than ever. To learn more, please visit us at Raveum.com and be sure to follow Raveum Insights for more discussions just like this one. And as we always say at Raveum, we are reimagining how the world invests in real estate. Thanks so much for listening.